Right, hello. Today I'd like to talk a little bit about transferring rental income or letting income to your spouse. And what I mean by that is having that income taxed on your partner as opposed to yourself. It's something we get asked quite a lot if you've got one person earning quite a lot of income and another person earning not very much income. They've got a house together, for example, rental property, that's automatically taxed at 50-50. That might be taxed at much higher marginal rates, so 40% or even higher for someone earning £40,000, £50,000 plus, or once you go over £100,000, again the tax rates rack up. And then the other person might be below the tax thresholds, or they might be a 20% basic rate taxpayer. So ideally, you want to tax that income on that other person or on the lower earner. It's not good enough simply to just pay that income into another person's bank account. That won't work for tax purposes. So it's just to summarise this very briefly. So the answer is you can transfer it to your spouse, but you have to follow the correct procedures. So first of all, is it jointly held? So how is the property held on the land registry? If it is joint, you both own the whole house. Essentially, if one person was to pass away, the house or their share of the house would automatically transfer to the other joint owner. So if you own a house with someone jointly, your beneficial ownership or your entitlement to that property is, whilst there's still two of you, 50-50, and that can't be split. I mean, that's how it is. Now the alternative then is if you hold it as tenants in common, then yes, now it is possible to have a different holding. So what I mean by that is one person could in theory have 75% ownership of the house, another person could have 25% ownership of the house, and then you could elect, you could split your rental income per your entitlement to the asset if it was to be sold. First of all, it's got to be tenants in common. Secondly, are you married or are you not married? Or are you married or are you not married? So if you're not married, then again, automatically the rental income should be declared on your tax returns as per your actual ownership, okay? So if you're not married and you literally buy property 50-50, that's how it should be split. If one person owned 80% and the other person owned 20%, then that is how the income should be split. So if you receive £10,000 of rents, £2,000 goes to the person who owns 20% and vice versa. Now if you're married, again the automatic position is 50-50. So even if one person has put in more money than another person, so for example they put in a deposit, but it's just held between two people that are married, it's automatically 50-50, and you can't do anything about that unless you do this next step, okay? So what you can do, again, if you hold it in tenants in common and you're a married couple, you can do what's called a deed of trust. Again, you can get a solicitor to do this if you want. I believe it's a couple of £100, a few £100. You don't have to get a solicitor to do this. You can just get a template off of Google, for example, and just have an agreement between yourselves, which is a legally binding document saying, I, Mr. Smith, I'm giving X share, or I'm giving 30% of my share of property away to Mrs. Smith. So now my ownership is proposed 20%, let's just say, and Mrs. Smith's ownership is 80%. Again, whatever numbers they are. You do that deed of trust, and then following on from that, within 60 days, you have to tell HMRC via this Form 17. So submit this form, and normally they want some sort of evidence. So they might want to see your deed of trust to prove that is the ownership of the property. And again, like I said, you have to do this within 60 days. So it's no good going a whole year and saying, oh, I want to split the income 80-20 or however you want it, 99-1%. You have to do this first, okay? So you have to do this deed of trust, ideally when you're buying the property. Then you would do your Form 17 within the 60 days, submit it to HMRC. They would then confirm that's been lodged by them, and then following on from that, you can declare the income on your tax return as per your entitlement to the asset if it was sold. Now that's not the end of it. If, for example, you're thinking, well, yes, I want to split it 80-20, but in 5 years' time I want to sell the property. Then I want it to be 50-50. I don't want 80% to go to my partner if we did actually put in 50-50 at the start, and that might be, that's fine, that's what we agree. So at that point in time, or a few months ideally before the sale, you do just need to trust again, transfer X amount back over to your partner. So again, it might be 50-50. And then again, do Form 17 to update HMRC if there's changes. Then when you sell it, the disposal proceeds will be 50-50 or however you want them to be split. So that's essentially what you have to do. So if you've got a property, the answer is yes, you can split it a different percentage to half-half. If it's joint, it needs to be tenants in common. If you're not married, then again, it's just per your ownership of that property. If you want to gift someone across a share of the house, then you can do so, but there are tax implications of that if you're not married. So do check into that. If you are married, it's 50-50 unless you do this procedure. Okay?